Hi, my name is Juan Hernandez. I am the founder and co-CEO at Openfinance. We are a SEC and FINRA registered broker-dealer and ATS, an alternative trading system, set up to trade alternative assets and digital securities. So digital alternative assets are, as their name implies, alternative assets that differ only in their format. So the digital format is one method to distinguish them from typical paper-based securities. Nowadays, most of these assets are digital in some capability, but digital assets and digital securities is used to indicate instruments that have a broader set of capabilities that are enabled by this digital technology. So we run the full scope of alternative assets from venture capital funds, private equity funds, hedge funds, private company stock, real estate funds, instruments like private REITs, public non-listed REITs, BDCs as well, business development companies. So effectively the whole spectrum of alternative assets. We currently have 5 digital securities that are actively trading, ranging in scope from a venture capital fund out of San Francisco named Blockchain Capital to a hedge fund named Protos, that all trade on the platform. So digitization is part of a broader picture trend of democratization of finance. It really is about the investor demand for more control and flexibility over their investment decisions, over their financial decisions and their financial future. So digitization to us is really an industry response to the growing investor demands that are being made. The digitization process, really what it does is reduce a lot of the friction points. A lot of these, the instruments within this industry are largely transacted on paper or work across different data silos where the only way to communicate across them is through paper or fax machine or some other slower mechanism like that. And so as these instruments become more and more digitized, you start to see the friction and quite frankly, then the fee structure or the cost structure around these instruments start to come down, especially as there's more and more competition as newer players enter the market. And so all of that is at the benefit of the end investor then who can take advantage of this more competitive market structure, which then leads to the lower costs and fees for them. Digitization allows for faster transfers in the secondary market, which again enables higher flexibility for the investor participants in this market who can then seek to rebalance their portfolio or diversify their holdings over an extended period of time instead of being stuck, if you will, within these historically illiquid assets. So a lot of the growth and innovation that we're seeing within private markets is simply due to the outperformance that it has against public markets. So it's attracted the attention of a lot of investors and institutional asset managers who see the macro level trends that are driving a lot of the interest into these markets. And so with that additional attention coming from the retail investor base, there's also been a renewed interest in a lot more flexibility and personalization options. And so you see that play out with the demand for lower cost structures, lower fee structures, increased flexibility in the form of liquidity options. Historically, these types of assets have been very illiquid, but the investor base that's consuming these instruments now has that desire for additional liquidity options. For real estate investors, it means now they'll have more options than ever before. And certainly there will be new opportunities that come forward that will allow them to self-select into instruments that might be more personalized to them and their risk appetite and their portfolio. And along with that, then they'll be able to create a much more balanced and diverse holdings portfolio that can then lead to a more satisfactory outcome for their investment thesis. So it just creates a lot more options, a lot more opportunities, and certainly opens up a universe that hasn't been open to them before.